Today we're going to be talking about the 3 most popular ways to make profits in the stock market. Hey everyone, Lead Trader with StocksToTrade, Tim Bohen here. Be sure to like, share, subscribe, and ring that bell if you're on YouTube to be notified as soon as we go live, as soon as we drop a podcast, as soon as we drop a basic how-to information video like this. So that being said, today we're going to kind of get into like some terms. But, a lot of this stuff can be often misunderstood. A lot of people hear long, short, and they'll mix up that a lot of the times, especially like with investing and swing trading. So I think this is important. And again, it's more of a beginner video, but hey, we all got to start somewhere. So when we talk about going, now keep in mind, I almost jumped ahead. Most of what I'm going to talk about today is in the day trading, short-term trading world. Okay. Now that's what most of you are probably here for. That's StocksToTrade is a great software for investing, for longer term trading, but it is geared towards day traders and short-term traders. And again, that's why I'm doing this video. Because maybe I'm on pre-market prep and I talk about going long a stock and people might think that means a long-term hold, or maybe I'll say, hey, this is a swing trade and they're not necessarily, they're confused what that means. So let's break down those 3 terms. So when we talk about going long a day trade, that means we're buying the stock. We're buying 100 shares. We're buying 1,000 shares with the anticipation of selling them higher. CEI, great example. Look at this beautiful breakout over 75 cents, already doubled, pushing back to the near the high of the day. So anyway, this was a day trade idea. We talked about this morning over those pre-market highs at 175. When I say talked about it this morning on pre-market prep, I go live every morning on the channel, 8:30 Eastern. Check it out. But anyway, this is Amex, American Stock Exchange stock. Many of us in the day trading community joke, we call the Amex, the American Stock Exchange, the Scamex, okay? Very risky, very speculative companies. So the reason I make that point, number one, CEI is kind of the stock du jour going into the afternoon, but also I would never, ever long-term hold an American Stock Exchange company. I mean, these are the worst of the worst, almost as bad as the OTCs, not quite. Nothing's worse than the OTCs, but the Amex stocks are close. So this is that day trade type idea and going long that stock. So what we're thinking about is we're not believers, okay? We're not investors. We're not long-term holders. We may know what the company does. We may read the press release, but at the end of the day, we know we're going to be in and out of this for minutes, hours, but no matter what, we're out at the end of the day. So we're done by the 4 p.m. close, or maybe into the after hours, which trades up till 8 p.m. Eastern. But we're not holding this overnight, because unless you hate sleep or you enjoy waking up to a crippling loss, which I don't know anybody that does, except for masochistic losing traders that never want to learn. The people that don't watch these videos, they enjoy the pain and the losses. But anyway, in a day trade, we're in and out the same day. Or the one exception is when we talk about a gapper. And this is another term that can get a little confusing because this is an overnight trade. Now, normally when we talk about OTC gappers, it is in the OTC markets, because a lot of those do, if they close at the high of the day, if they close near the high of the day, they tend to gap up the next day. Now, I still consider that a day trading strategy, because the idea is you're buying into the close, like 3:30 p.m., 3:45 p.m., and then you're selling right at the open, 9:35 a.m. the next day, maybe 9:45, maybe 10 a.m. the next day. And understand OTC's very number one, OTCs don't trade in after hours, so you don't have to worry about that. And they're very illiquid. They barely trade in pre-market. So that's why we do like them for the gappers. Because the thing with NASDAQs and NYSEs and Amexes, they trade up till 8 p.m. They start trading at 4 a.m. Eastern. So it's like just a terrible day. The nice thing about OTCs is you can gap them and you don't have all that stress and all that time. So that strategy I still consider a day trade philosophy, because ultimately you're in the trade an hour market time. So when I say market time, OTCs close at 4 p.m. They open back up at 9:30. So yeah, maybe you're in the stock 16 hours, but market time you're in at 45 minutes. And it's a day, ultimately it's a pattern day trader friendly philosophy. So that's long day trading, buying the stock, selling in minutes, an hour later, or maybe you're gapping in OTC, but market time, you're still in and out, hour, couple hours tops. Then when we talk about short selling, and again, this is where people might get concerned, because you say, oh, I shorted the stock, or not concerned, you get confused, not concerned. They get confused because when you say I shorted the stock, a lot of newer traders will be like, they think that just means like short term, like you were in and out in minutes. No, understand when you're shorting a stock, you're selling before you buy. And this get confusing. We got a bunch of videos on this, got a bunch of blog posts. I got an ebook on short selling if you want more. But just ultimately, the easiest way to explain this is you're just reversing time, okay? And you're selling before you're buying, okay? And the idea is you're still buying high and selling low, okay? So the idea is, or buying low and selling high, that's if you screw up your short sell. You're buying low and selling high. You're just reversing the time frame. So a great short sell would be you sell at $2, sell the stock at $2, and you buy it back at $1. So you profit from the difference. So you sold at $2, you bought at $1, so you're made $1 a share. It's just the time frame is reversed. Now, if you short sell something on your brokerage account, you actually take a negative position. So if you short 1,000 shares of a stock, you'll actually see a negative 1,000 shares in your brokerage account. Now, you do need to borrow those shares. Again, it's confusing, but we have resources to help you. But the idea is that you're doing the same thing for a profit. Again, buying low, selling high. If you take a loss, you're as I screwed up in the beginning, you're buying high and selling low. So if you short that stock at $1 and you buy it back, buy to cover it too, you lost the difference. So that's the idea. Now, almost all short sells, if you're smart, are day trades. It can be very, very dangerous in this market we're in to long-term short sell. When you borrow the stock, you're actually paying short selling fees, locate fees, and interest. So keep that in mind. If you think you're going to hold a short for a long term, really the fees can eat you alive. So short selling to me is a day trade only strategy. But then the last term, swing. Again, often misunderstood, confused. When I talk about a swing trade, and when pretty much every short-term biased trader, what we're saying there, it's an overnight trade to maybe multiple days or multiple weeks. So it's basically that one step between day trading and investing. We're looking to trade higher quality stocks for swing trades because, the higher quality stocks, the higher price stocks, they don't make the crazy moves, the 100% moves, the 200% moves. You got to be a little more patient. But the nice thing about swing trading is you're trading higher quality stocks, so your potential for disaster is much lower. What we typically use that strategy for is earnings winners. That might be a term you've heard, but we look to swing trade earnings winners. That's a stock with great news. Their sales are up, their profits are up, they're in a hot sector, but it's a higher market cap stock. So it takes a few days, a few weeks to move that 20, 30, 40%. But again, the nice thing is they're higher quality stocks, so you can actually sleep at night versus a sketchy low float day trade type stock. So that being said, hope you guys like this. Drop me a comment below. We'd like to appeal to everyone here. Do you like the basics video? I mean, listen, like I said, you're probably here on YouTube because you're looking to learn, and this might be an advanced video to you. Or maybe you're kind of new to some of these wild runners and you're like, hey, I picked up something from this video. So drop me a comment. And as always, Definitely check out Pre-Market Prep every Monday, Tuesday, Wednesday, Thursday. Every day the market is open. I go live at 8:30 Eastern on YouTube, Instagram, and Facebook. Check it out. It's a great way to learn these rapid fire stocks, and we'll see you next time.